While you were sleeping, the rules of the American economy were rewritten. In the last 96 hours, we have seen a tectonic shift in the global liquidity index. The soft landing narrative sold to the public by mainstream media has officially collapsed. What we are witnessing right now isn't a market correction, it's a systemic liquidity trap. The Federal Reserve is no longer fighting inflation, they are fighting for the survival of the dollar's hegemony. If you are holding cash in a traditional commercial bank, you are standing on a sinking ship. The elite 1% have already moved into hard asset corridors and private sovereign ledgers. They know that the next 12 months will be the largest transfer of wealth in human history. The question is, are you the one being transferred, or are you the one receiving? Pay attention. This is the dollar mindset blueprint for the 2026 reset. The PCE shock and the death of interest rate cuts. The latest personal consumption expenditures, PCE data released this week, sent a shockwave through the bond market. It confirmed what the smart money already knew. Inflation is not transitory, it is structural. Top analysts at JP Morgan and Goldman Sachs are now pricing in a higher for longer interest rate environment that will crush anyone over-leveraged in consumer debt. But here is the secret. High interest rates are a tax on the poor and a dividend for the wealthy. While the middle class struggles with 8% mortgage rates, the sovereign 1% are utilizing institutional arbitrage. They are lending their capital at premium rates through private credit funds, effectively becoming the bank while the traditional banking sector suffocates under its own weight. The energy catalyst and sovereign risk. Look at the energy markets over the last 72 hours. The geopolitical friction in the Middle East isn't just a news headline, it's a capital catalyst. As crude oil pushes toward $100 a barrel, the cost of everything is being repriced. The top 5 financial news outlets are talking about gas prices, but the dollar mindset is talking about energy sovereignty. The wealthiest family offices are rotating out of speculative AI tech and into direct energy ownership and infrastructure bonds. They understand that in a high-inflation, high-conflict world, value is found in what is tangible, not what is digital. They are building a portfolio shield that thrives on volatility, while the retail investor panics at every headline. Exit the matrix, the private family office strategy. To survive this reset, you must adopt the family office model. This is the highest level of financial guidance in the US. It's not about investing in the stock market. It's about owning the cycle. A family office doesn't use a broker. They use a private trust. They don't pay capital gains. They use 1031 exchanges and opportunity zones. They don't keep money in a savings account. They use captive insurance cells to create their own revolving credit. In this environment, your greatest liability is your dependency on the system. The sovereign exit means moving your capital into structures that the IRS cannot penetrate and the courts cannot seize. It's about becoming judgment-proof and tax-efficient. The 2026 sovereign bond trap and the exit strategy. In the last 96 hours, a silent alarm went off in the secondary bond markets. The yield curve inversion is no longer a warning, it is a default signal. While the average investor is chasing 5% in a money market fund, the institutional giants are exiting. They know that a currency is only as strong as the debt that backs it, and the US debt ceiling is no longer a political debate. It is a mathematical impossibility. The sovereign 1% are not waiting for a bailout. They are executing the private liquidity pivot. They are moving capital into hard assets that have zero counterparty risk. We are talking about physical gold vaulting in non-extradition jurisdictions and direct ownership of energy infrastructure. If you don't own the underlying asset, you don't own the wealth, you own a promise. And in 2026, promises are the first thing to break. The goal is simple. Move from counterparty dependency to absolute ownership. The Swiss Lombard loan and international arbitrage. Let's go deeper into the global arbitrage loop. High net worth Americans are no longer restricted to US interest rates. By utilizing Swiss Lombard loans, the elite are borrowing against their diversified portfolios at rates that are mathematically superior to anything found on Wall Street. Imagine having a $10 million portfolio and being able to access $7 million in liquidity at a 2% spread, while the US prime rate is double that. You then take that liquidity and reinvest it into high-yield private credit in emerging markets or distressed U.S. real estate. You are literally making money on the spread between two different national economies. This is international arbitrage. It is legal, it is highly efficient, and it is how the 1% stay wealthy while the middle class is crushed by domestic inflation. The irrevocable trust, the final legal fortress. If your name is on your house, your car, or your brokerage account, you are a target. In the current U.S. legal climate, success is often treated as a crime. The asset protection strategy for 2026 is the statutory irrevocable trust. By transferring ownership to a trust based in South Dakota or Nevada, you are creating a legal chasm that no frivolous lawsuit can cross. You own nothing, but you control everything. The trust owns the asset. You are merely the manager. This is the judgment-proof shield. When a creditor looks at your personal balance sheet, they see zero. But inside the trust, your empire remains intact, growing tax-free for your next 3 generations. This is the dollar mindset. True security isn't about how much you make. It's about how much you can defend from the legal predators. The 12-month quantum roadmap. To wrap this 35-minute blueprint, we need to talk about the execution phase. You cannot wait for the 2026 election or the next Fed meeting. You need to move now. Phase 1, liquidity audit. Identify every dollar currently trapped in a low-yield, high-tax environment. Phase 2, structural pivot. Move that capital into an IRS Section 7702 framework or a private placement life insurance, PPLI sell. Phase 3, arbitrage deployment. Use your private liquidity to buy distressed assets when the market panics. The next 12 months will be chaotic for the unprepared, but it will be a harvest season for the sovereign 1%. The system isn't broken. It's working exactly as intended, to concentrate wealth. It's time to decide which side of the ledger you want to be on. The curtain is closing on the old financial world. The 2026 reset is a filter. On one side, you have the consumers, the people who pay the interest, pay the taxes, and follow the headlines. On the other side, you have the producers, the people who collect the interest, engineer the tax shields, and write the history. This is the dollar mindset. We don't just predict the future, we fund it. If you want to stay ahead of the curve, if you want the high-ticket strategies that Wall Street hides from the public, you need to be in this circle. Subscribe to Dollar Mindset. Hit the notification bell. Because in this economy, the only thing more expensive than an education is ignorance. I'll see you in the vault.